Hey everyone, I wanted to talk a little bit about stock trading when it comes to it being gambling. So this is something you would probably very easily find if you just search up online stock trading. You hear a lot of, there will probably be a mix of a lot of exaggerated, very positive stories of like, oh look, I turned $100 into like $1 million. It's like, no, you didn't. No, you didn't. And if you did, you risked way too much money to actually legitimately do that, okay? And then you also have other horror stories of, everyone is gambling, like 99% of people lose money and all this sort of stuff. And kind of everything in between. And all of that is very true because overall, when we look at the idea of it being gambling, there's a few ways we have to look at this because let's just put it from my perspective. Okay, so I have been in the stock market game, and probably many of you have as well if you have a retirement plan for your company that you work for or something along those lines. You're investing in different stocks and funds that grow over time. Oftentimes, if it's a retirement plan or a 401k, whatever it is, you're not looking at it every single day, but that is how you build wealth in the long term, okay? You could go through a recession of 5-6 years before it ends up going back to positive. But if you're invested in the long term, you don't really care because we're talking 20, 30, 40 years down the line is when you get the money. So we're not talking about investing. But I would say a lot of you, all of you, everyone watching should be invested in the long term because that is how you build wealth. That is how, when you're old, you're going to have a lot of money to be able to financially support yourself when you're much older. So I've been doing that I've been invested since, I don't know how long, like 2017, 2018 or so. But specifically when it comes to trading, we're talking about looking at a chart, seeing certain signals, buy signals, sell signals, and then purchasing the stock and then selling the stock. That can be, on a weekly, monthly basis, whether that be like you will buy it today and then you sell it like a week from now, a month from now. That is swing trading. I've done some of that. I've not really had much luck with that for the most part because it's like that's not really my style. So I haven't really had like a full plan with that, but we're talking about intraday trading. So a day trade where you buy it and you sell it within the same day. Sometimes it can be as quick as like a few minutes, even like a few seconds sometimes, it's like, oh, look, you bought it. Literally a minute later, you've reached your target and you're done. That's it. You're done. So that's basically what we're talking about. Okay, and I've been doing that since the very end of 2019. So we're talking about a little over 4 years at this point. Okay, I have never given up. I have never stopped, even if I don't necessarily talk about it all the time, because I know I've made plenty of videos about it. Maybe some people are wondering, oh, did you stop doing that or whatever? No, I've been consistent with it every single day, just looking at the stuff. I've never been of the mindset to give up because that's not who I am. I am not someone who ever gives up. And that kind of what leads into this topic for today because stock trading, gambling. Is it gambling? I would say anyone who considers stock trading to be gambling is someone who is not familiar enough or doesn't understand the concept enough to fully make an accurate assessment of what stock trading actually is. Because guess what? You're going to have gamblers. You're going to have people who gamble their money away. There are so many horror stories of people who put like their entire life savings into a stock. Like let's say, that whole AMC and GameStop thing. I couldn't think of the name of the company. So it's like, oh my gosh, look how crazy that just went up. Now that is not stock trading. If you think buying GameStop or AMC looking for it to like 10x is stock trading, then unfortunately that is gambling. That is what gambling is, okay? Because you can't expect that. That's highly unlikely. It can happen, especially if you look at very, 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 smaller companies that, very, very low price stocks and all that sort of stuff. I don't do that sort of stuff, okay? But that's just too risky for me. So in many ways, when I first started, I wasn't looking at all these charts and all this sort of stuff. I was just looking at a standard line graph. I'm like, oh look, this stock looks like it's starting to go up. I'm gonna go ahead and buy it. So you go ahead and buy it. It's like, oh look, I'm in the money for a little bit. Let me go ahead and sell it. And then you go ahead and sell it. No reason as to why you do those things. Just buy it and sell it. There you go. Or you see stocks just kind of going up. Oh, I'm gonna go ahead and buy it when it's like way up here. And then it just collapses right after you buy it. That is all gambling. It really is. And that's basically how most people start out, because they don't understand what all this actually is, what things you need to be looking for. And as someone who's been doing this for over 4 years at this point, getting to a point where I finally have a much better understanding. I've had a better understanding for probably 3 years in is when I really started to understand and formulate a plan that is appropriate for me, that works the best for me, and then fine-tuning that plan over the next year, where this year, right now, 2024, is basically the year of solidifying the plan that I have in place. If there's any sort of adjustments that need to be made, it's for the most part, it's so minor, and I would need to make sure that they would actually work in reality, but also sticking true to that. But on the gambling aspect, so many people put a bunch of money in, expecting it to do something, hoping, crossing their fingers, saying, I hope this goes up. That is the mindset of a gambler. Someone who doesn't understand what they're doing, who put too much money and risk involved into it, and then it craters, the stock goes down, and they have no exit plan. It's like, how much are you willing to lose? Oh, I'm just going to keep buying. It just keeps going down, down, down. I'm going to keep buying, wasting all of your money on this sort of stuff. That is what a gambler is. And unfortunately, that's what a lot of people do, especially if you're going to do this for a longer term thing. The first year, that's very likely how you're going to be. Okay? Maybe even the first 2 years you could be like that. And it's often because people lack money management skills. These people who are gamblers, I've never been one to be a gambler, mind you. Okay, I would never consider myself to be a gambler. I've never put on unnecessary risk and all this sort of stuff. So that's not me. But for people who are, that's what kind of they end up doing, because they lack proper money management skills. I have always been someone who has appropriate money management skills, to the point where it's like there have been times that I've barely made any money from my other sources of income, like very, very low, and I'm just kind of like worried, like, it's like, oh my gosh, I'm going to be spending money on this and that. It's like I don't really. I'm kind of thinking in my mind, what if I don't have the money to pay for these sort of things? But then I end up looking like I do have the money for those things. I always have the money for those things. Somehow, even during times that I have not made a lot of money doing other things, somehow I still have it. Somehow it's always still there for me. And sometimes it just magically appears as well. It's like there have been times that life has just given it to me. When other things have been kind of rough and tough, it's like, here it is, So I always have appropriate money management skills. That is the number one thing. If you lack that, then you are a gambler. Okay, so the whole idea of stock trading being gambling, the whole thing, in theory, is not gambling if you manage it and look at it correctly. Instead, what is it then if it's not gambling? If you have appropriate money management skills, if you formulate a plan and stick to that plan, and that's one of the hardest things, sticking to the plan, because there have been plenty of times I've broken my plan. You have a set of rules, and it's like, oh look, this looks good, that looks good. I can kind of make a slight adjustment on that, and you kind of break your plan. What happens then? You break your plan, you buy it, it goes down, you lose money, you sell it. There you go. That's it. You're out. It's like, why did I break my plan? Why did I break my plan? until you've actually done this yourself, it's basically saying, why didn't you just stick to your plan? That would have been easy. No, unless you actually are doing this sort of thing yourself, you don't understand just how hard it is to keep to that plan, to the point where I have a checklist of things that I review. It's like, okay, this is a stock that I'm looking at today. Does it meet this criteria? Am I looking at all the stuff involved here? Because there are sometimes you will make mistakes accidentally as well, not even just intentionally, where you intentionally break your plan, but there are times that you will accidentally overlook something. Okay? So what is stock trading then? That would be statistical probability. That's what you're looking at. You're looking at what is the probability based on the chart that I'm seeing in front of me here. What is the probability that it is going to, I'm going to buy it and it's going to go up to where I'm going to sell it at, or that it's going to go down to wherever it is? Okay? What is the probability of those things? What is the likelihood of that? That's basically what you're playing off of. If you have a 80% chance, 80% chance that based on the chart that you're looking at, based on all of the analysis that you have done, maybe it's even higher than 80%. You know that this is where I'm going to buy it. It's going to go up to this level. This is where I'm going to sell it. And there you go. You just made a bunch of money. If the probability of that is, substantially high, then you take that trade and you end up winning on that, because that is the probability. Of course, there is that probability that it doesn't go that way. Anomalies occur. But that's how you have to look at it. It is the game of statistical probability. And I don't know about you, but when I was in high school, statistics was my favorite math class, to the point where it was my absolute favorite one. It was, I think, it wasn't even my last year in school, I don't believe. Or maybe it was in high school, either like 11th or 12th grade. I forget exactly. I'm thinking it was 12th, but maybe 11th. Regardless, I like statistics and probability so much that I actually was a step ahead, and I would look up information prior and learn things prior so that I understood what was going on. So for me, I loved that aspect. Okay, so I think that's one of the. So there were many key components when it comes to stock trading. Then, money management skills. I have money management skills. If you lack that, that is the number one thing before you even get involved in this at all. I have that, so I was already good then. The ability to understand patterns and charts, that's something that you end up learning. I'm someone who is I can understand patterns by default already. A lot of people can spot certain patterns and trends. Being able to apply that to looking at a stock chart, a little bit different there. You see trends. People who are into like marketing may be very good at looking at certain patterns, looking at certain trends. How do things occur? That's not, my main thing, it's like, but I can spot certain patterns here and there and whatever. Okay, so that was another thing to learn. Okay, so applying those things, managing your risk levels, then you realize it's not gambling. None of it is gambling. I'm not just throwing my money and say, here, I hope it goes up. I'm going to throw $1,000. I hope I get $1,500 back. It's like, oh wait, I threw $1,000. I got like $500 back. I lost half of it. It's like you have to be looking at what is your risk level. How much money are you putting on compared to how much money you have in total? It should be a very, very small risk. Like if you have a total of $50,000 in combined worth, you should not be saying, okay, I'm going to buy $40,000 of this one stock and hopefully it doubles. What if it doesn't? What if it keeps going down and down and down? You don't know when to sell, and there you go. There goes all of your hard-earned money gone. Okay? That is the gambling aspect. So when you see a lot of these videos online, all this sort of stuff talking about it being gambling, I just explained, from that aspect, it is gambling. If you don't have proper money management skills, it is gambling. You're throwing your money away. But if you come into it with the mindset of, this is what my plan is. I'm going to stick to my plan. I'm going to look at this chart. I'm going to look at these patterns. I'm going to scan for the stocks that I'm going to be trading for the day. I'm going to look to make sure that they meet the criteria that I have laid out for myself. Then even if you win only 50% of the time, your plan should still make you money. How? How should it still make you money if it's 50%? Well, the main goal is often, if you're winning 50%, and this, again, this is going to be different. Everyone's going to have a different plan of action, a different plan. But for me, for example, okay, let's just take me, for example, and what my plan says. So if I am risking $1 per share on a stock that I'm buying, okay, so let's just say the stock is at $50. Okay, that is where I'm buying it, $50. And if it decides, hey, I'm going to buy it at $50, and then if it goes the opposite way and it goes down to $49, I'm going to sell it at $49 as a loss to prevent myself from losing any more, because it's possible. What if it goes down to 48, 47, 46? What if it just completely just tanks, all the way down to 40 even? Maybe some crazy thing that happens, who knows? That's a possibility. It's unlikely, but it's certainly a possibility. So you have to have that stop loss in of how much you're willing to lose. So $1 risk per share. So that means if you buy 100 shares, that'll be $100 risk. Okay. So again, it's all about sizing. It's all about being proportional to what your account size is. My plan says whatever it is that I'm risking. So if I'm risking $1 per share, I want to have two target prices of where I'm going to be making the money. The first target price is 1-to-1. So that means $1 up. So that means when it goes from 50 to 51, I'm going to take off half of my shares right there. Okay, so if I have 100 shares, I'm going to take off 50 when it goes up to $51. Okay, so that means I have locked in some of the profits there, and I have lowered my risk if it were to decide, hey, I'm going to go back down to the downside. Okay, so I've locked in, let's say I would have locked in $50 at that point, and then if it goes down the other way, I would have lost 50, and then it would have been basically break even at that point. But I mean, I have a few other things that would actually prevent it. I'm just giving a very broad example right now. And then my second target will be double that. Okay, so it will be a $2 winner to the upside, so it will be 52. Which would mean then the most I could lose if I take 100 shares of a $1 would be $100 loss. Or if it goes to the upside, it would be a $150 winner. Okay? Now, of course, some people may do different targets. Some people may do all 1-for-1. So that means they take out all their shares when it goes up 1-for-1. That can be a little bit of a problem because, as I just said, if you may not necessarily always win if your plan says you only win 50% of the time, you may be kind of break even. But the way that I'm doing it, I'm basically getting 1.5 times the amount. Some people may do two for one only, so that means they would keep their 100 shares until it goes double of what their stop is. So that would be $100 loss or $200 gains. That's double the amount. Some people may go even higher and do 300. The higher you go, the way that you change these sort of things, it's going to affect the amount of time that you win. But how I have my plan, even if I'm winning 50% of the time, just 50%, I would still be making money. It could probably even go down to 40% win, and I could still make a decent amount of money. Not as much as 50%, but if you're managing all these sort of things, if you're looking at all the statistics and the probability of these things, if you keep a log of everything that you're doing, and you're looking at the patterns, you're looking at the mistakes that you made, then it's not gambling, because you come in with a set of actions here of what you'll be doing, what you'll be, looking at and actually following through with. So I hope that just helped clear it up. I just went on and on about that sort of stuff. Now, at some point, I will make an update regarding my own, stock trading stuff, because, certainly guess it's been about a year, maybe a little longer at this point since I made an update about that. I don't know, but yeah, 4.5, a little less than 4.5 years at this point doing this. So I have a much better understanding of what I'm doing here, and I'm actually sticking true to the plan. So I'm sure you're wondering, well, how's that going for you? You know, very, very good. Very, very good. I'll just make a future update at some point to actually show you more of what I'm actually doing. But, you know, as much as what people are interested in, because some people, well, a lot of people are probably not going to really understand, because you don't, unless you do this yourself, you're not going to understand. You're really not. But let me know what your thoughts are. I'm curious to hear your thoughts, whether you think stock trading is gambling, whether or not you have gambled some of your money away. You've lost a lot of money. I've certainly lost, you know, plenty of money as well, but proper risk management, in theory, it wasn't all that much money. That wasn't. I didn't lose thousands and thousands of dollars. No, I probably, you know, lost a fraction of that because I had proper money management skills to the point where it's like, okay, this is how much I'm willing to risk on this. And then if you lose it, there you go. You end up losing some of that. So you never want to put on more risk than you can handle. And a lot of people do, expecting to get rich quick, and that does not happen. So let me know what your thoughts are. Y'all take care. Have a great one, and I'll catch you later. Bye-bye.